we want to help the daring build legendary companies from idea to IPO and beyond. Increasingly, those founders are international, which is why in 2005 we went into China, we went into India, we went into Southeast Asia. And increasingly, those founders choose to stay private for longer, which is why it's not enough to make seed investments. And by the way, we were seed investors in Stripe when it was a couple of brothers from Ireland who had yet to process a single payment. We were seed investors in Airbnb when it was 3 guys who were literally staying on air mattresses and selling boxes of cereal to pay the bills. And so we're still very focused on seeds and Series A and partnering with founders as early as we can get. However, as they stay private longer, if they come to us and need support for a much larger investment, we would hate to turn them away. And so the only reason you've seen us raising more money is because founders are looking for more support as they stay private longer.
Some might suggest that one of the reasons you're raising money and large sums of it is because SoftBank has forced people like you to raise a lot of money, and they've completely had a dramatic effect on venture capital. The Vision Fund. We just had a report on not that long ago about the LATAM Fund that they're raising. So is there a SoftBank effect for Sequoia?
I think SoftBank is an extreme example of something that was inevitable in Silicon Valley anyway. There are more and more companies chasing bigger and bigger markets. The menu of opportunities is longer than it's ever been before. I think SoftBank just took that to the logical extreme. Instead of creeping their way up from a couple billion to slightly larger funds, they just said, we'll go all the way to 100 billion. As far as Sequoia versus SoftBank, we don't see them as competitors. We'll never out-SoftBank SoftBank. SoftBank's strategy is to use capital as a weapon. We should be able to out-Sequoia SoftBank all day long, and for us that just means getting to companies earlier and building deeper partnerships and helping them build their business.
Do you think they're blowing out valuations, though, by virtue of what they're doing?
You know, since 1972, which is when Sequoia got into business, it's been a constant refrain that there's too much money chasing not enough opportunities, and the impact of that is always increasing valuations. And so I don't think that high valuations are an issue. I think lack of an ability to see the future and appreciate where paying those valuations is really worth it is where investors make mistakes.
Let's double click on this idea of, you know, kind of a weapon of both capital defense, but also destruction or disruption. In Zoom, you had amazing capital efficiency, which was why the return was so extraordinary. But when we look at areas like banking with Robinhood, or when we look at areas of ride sharing, or we look at areas of food delivery, where SoftBank has moved in with massive checks, and now you have competition that is diseconomic on a unit level, right? What is this going to do to the overall returns of these businesses that now have to raise dramatically more capital to compete with diseconomic behavior? We've seen this with Meituan in China, which has been very destructive to their overall value.
So I think there's a quirk of human nature. If somebody says the share price is $100 versus $10, the average person thinks that $10 is cheaper, even though it's all relative. I think we see the same thing playing out in the fundraising environment, where it seems like hundreds of millions of dollars going into a company is a lot of money, but if the scale of the market opportunity is a couple of orders of magnitude larger than it is for your average software company, that may well be worth it. And so DoorDash is one example where we have partnered with SoftBank. We led the Series A and a couple of rounds after that. SoftBank has led some more recent rounds. DoorDash is a company that is actually unit economic very healthy and scaling into a gigantic market. So it's all relative.